fair value gaps. So what are fair value gaps? Fair value gap is an area on the price chart where markets move so quickly that there's an imbalance between buyers and sellers. It is a gap created when price jumps aggressively, leaving behind an area that wasn't traded efficiently. Traders believe that price often reacts when it returns to that area before continuing to the original direction, making it a potential entry zone for trades. So what this means is in the bearish scenario, when price has created a fair value gap is just a combination of three candles. The first one, the second one, which is this one, then the third one. It doesn't matter the color of the candle, it can be any colors. So the gap is just from the bottom of the first week till the top of the third week. That's for the bearish scenario. Then what we're expecting is for price to come, fill this gap and return back to this level, continue pushing down. It's just like a continuation entry or confirmation entry. So we expect price to go up, fill this gap and push down. That's what we call a fair value gap. But in a case where this week is somewhere here, let me take this out, we do not have a fair value gap because there's no space for it. So the gap is just the space between the first and third week. Yeah, that's the fair value gap. Then for the bullish scenario is the week, then the bottom of the third week. So in a scenario where this is overlapping this, we don't have a fair value gap. The only way we can call it a valid fair value gap is when there's a space in between. Now let's go to the live chart and see what we can find. Let's identify fair value gaps. Let me go to a fresh chart. So let's use the 1 hour time frame to identify this fair value gaps and see how it works. Now let's start from here. So this is a fair value gap, this area. We take the week of this first candle, then the week of this third candle, and map it out. Then we extend it further. Then what did we see price do? Price came up to fill this place before pushing down. Let's check another example. You can spot them easily. Now this is another fair value gap, a bullish scenario. Extend it. What do you see price? The price came up, then came down to fill this order before moving up. They are so easy to spot, you can spot them on any time frame. Let's switch to 30 minutes. Okay. The bottom of the first candle and the top of the third candle. What do you see price do? Came up, filled it and pushed down. There are more examples. And mind you, a valid fair value gap should have a lot of space in the middle candle. It should not be like a little space. Look at this one right here. You can see there's a big space, a big gap between those candles, between the wicks of the candles. This is a fair value gap. Let's switch to 15 minutes. There are a lot of them you can find. Even down to the 1 minute time frame, you can see a fair value gap there. Let me look for one more example, and I can leave it to practice on your own. This is another one. Yeah, same thing. Came to fill this before pushing down. Another one right here. Fill this before pushing down. So that's just how to spot fair value gap.